So this is now pre-trade and then during the trade. So pre-trade, what I want to do once I've identified those levels, I want to set alarms. And here again, I've just put you sort of 30 to 50 pips below or above my key levels. If you're watching the market, during the whole session and you're not doing anything else, then maybe alarms is, not needed. But I find they are beneficial because they alert me to potential trade opportunities if I'm doing something else on my PC. Okay. Once price hits my level or gets close to the level of interest, I'll focus in on my smaller time frame chart looking for trading opportunities. If you can't be in front of the PC all day, then I would recommend looking at your 60 and 30 minute chart for patterns. If you can be in front of the chart, then you can really get down to your smaller time frames like 1, 5, 15 minute, looking for small patterns with much lower risk. And I'm looking for price to prove to me that the level is likely to hold using a few of the patterns from my toolbox. So we went over the patterns. If we got a key level, price hits the level, and those levels are from the daily and 4 hour chart. If they hit those levels, I want to look at the smaller time frames, because remember, your smaller time frame patterns are going to set up before your larger time frame patterns, more often than not. If you've got a key level on the daily or 4 hour chart, and you then have a godly put your bad butterfly crab head and shoulders pattern setting up on the 5 minute chart, those patterns will obviously set up before the same pattern on a higher time frame. So you'll normally find you get the small time frame pattern, and then the hourly chart, normally from experience you can look at about 2 days for the pattern to set up. So that's why I say, if you can't be in front of your computer all day, then a 60 minute or 30 minute chart is really good for looking for those patterns, because they can take a few days to actually set up. And if no pattern forms at the level, that's the key level, and price continues on through it, I will then focus on my 4 hour daily chart once again to see where the next big level is. So as the previous section when I went over identifying those levels, where's the key level above price, where's key level below price. If price doesn't sort of react around those levels, then I want to look at the next area up from there. Okay, so if we have a big news day, for example, or a fast moving market, and price blows through the levels that I've marked off, I want to be aware of where the next major area is above or below my marked off level.